Hey traders, welcome back to another Trading Edge video. As always, I'm your host, Akil Stokes. If you guys are new, I am a Forex trader. I'm also a trading coach over at tier1trading.com. And this is a video where I usually give you a look at what's on my radar trading-wise for either the day ahead or the week ahead. Now I say usually because today we're going to do something different. We're going to talk about three things today. One, we had a heck of a week in the market, so I want to walk you through what I consider to be my trade of the week. Two, I want to talk a little bit about how proper knowledge can help with trading psychology, especially for you guys that struggle while you're in a trade, watching the market tick up and down, being either afraid that you're going to be stopped out or afraid that the market's going to reverse before it hits your targets. And then finally, it is the end of the month, so as I usually do, I want to take a look at the numbers and just keep you guys updated on how my trading is going. So we'll hop into that trade of the week first and foremost. But before we do, if you guys are new, do me a favor, subscribe. I challenge you to watch at least 10 other episodes of either the Trading Edge or the Trading Coach podcast. That way you get a true feel for who I am as a trading coach and not only my style in the markets, but my philosophy about trading, entrepreneurship, and life in general. And then I also want you to share, right? Share this with at least 3 other traders. Share this on at least 3 other social media sites so we can continue spreading the word about what we're doing here, our philosophy on the markets. And that way we can eliminate a lot of the junk that is being spread out there about trading being a get-rich-quick scheme and hopefully save you guys some money so you don't fall victim of that. All right, if you can do that, then we'll head into the video and we'll get started with the trade of the week. But the first pair I want to take a look at is the Aussie Canada. And this is probably the only new pair that interests me. I do have, I'll show you guys New Zealand dollar is a cipher on there that should be filled right now. And Aussie dollar has a cipher as well. But this is a new pair I want to put on your radar. And what we have here is an interesting scenario because we have 2 selling signals kind of lining up. So first things first, the market rallied off of a little bit of consolidation. You can see at our previous VS1 level, a previous level of structure support. And we came back up into a previous level of structure resistance right here. And for you guys that have taken the foundation course, right, you can tell that these candles give us a specific story, right? You can see that the wicks, the majority of the wicks are to the upside, which means the buyers tried to push it up and they got rejected. They pushed it up, got rejected, and now we're getting an engulfing candle. And this 3-bar combination right here, this is good for anybody looking for a reason to sell. This is on the daily chart. So we do that IPDE process, identify, predict, decide, execute. We identify what we're looking at on the higher time frame, the daily. We then predict what that means, a potential selling opportunity. And we take that knowledge, we form a bias from it, meaning when you look at this chart, ask yourself this question: do you want to be a buyer or a seller? Are you looking for buying opportunities or selling opportunities? I know me personally, I'm looking for selling opportunities. And we keep that bias and we take it down to our lower time frames. Let's go down to the 4-hour chart and see if we can add on that. And what we're getting on the 4-hour chart is another reversal signal, right? So we had one reversal signal on the higher time frame, and obviously the day isn't completed, but that lower low, lower close would give us a valid signal. We go down to the lower time frame, and what we have is a head and shoulders pattern, which is a reversal pattern which comes at the end of an exhausted trend, right? We have our left shoulder right here. We have our head up here. We formed our right shoulder and we're getting ready to break a neckline, depending on how you draw the neckline. We have a blue line right there. You can also look at a slanted neckline like this. And again, the Head and Shoulders training, guys, it is going to be out June 1st. It's going to be a 10-part video series, at least 10. I'm working hard on it right now, but it should be up June 1st. That's the goal. So we'll talk all about the different types of head and shoulders, slanted necklines, horizontal necklines, different entry tactics. So just relax for a week, and this will make more sense. But the head and shoulders in general is a reversal pattern. So reversal, bearish bias on the higher time frame due to the candlestick pattern. bearish bias on the lower time frame due to the head and shoulders pattern. So what you want to do is you want to put 2 and 2 together and ask yourself, okay, that's 2 signals, 2 clues that I should be getting short or that I should be looking to get short. Now, how can I involve myself in the trade, right? And the step after that, once you decide, right, so identify, predict, decide how you want to involve yourself in the trade, is you also want to look at entries, stops, and targets. Not only how can I get involved, but where is price action likely to go? And the level of structure that stands out to me, looks like I'm filled a New Zealand dollar. Let me just double check that first and foremost, right? All right, so back to the Aussie Canada here. We look at our chart here and we ask ourselves, well, where is price action likely to go next? Now, I don't think we can make the case for saying we're going to see a full extension downward, right? We did hold that previous structure. So if anything, I would expect to see a retest of the high of our consolidation. And basically that's going to be that line right in the sand about 97 flat, right? If you look very closely, I'll just draw it out, a horizontal line, 97 flat. Look very closely at this line. You've got a little pregnant pause right here. So green candle, 1, 2, 3, 4 bullish candles and a little bit of consolidation there before a continuation higher. We've got structure support or resistance right here, hitting a few times. And then even looking left, right, we're not quite here, but still in the same range. Previous structure support right there. And you can see structure support a few times at that level. So I don't think 97 cent is a bad place to look for targets. And then of course you measure that out, right? So you know entries, that's based on your trading plan, right? You know targets now based on the analysis you did, and you ask yourself about stops. Well, where do stops need to be? And obvious place for stops is going to be above our previous level of structure resistance, which is right up here. Let's just do a 1 ATR stop. Again, you guys should have rules on how you play stop losses. I personally use the ATR, so that's why I'm defaulting to this way. ATR is 25, 98.58 plus 25. Let's go 60 would be 85, 83. That will give you a stop loss right here. That's going to give you a risk that looks like this. Let's say you're entering right at market, and a reward that looks like this. Now, in this scenario, it doesn't look like the risk reward is 1-to-1. Now it's up to you whether your rules say you need to have a 1-to-1 or not. Again, I personally need a 1-to-1 or I can't get involved. So the next thing I want to do is ask myself, is there a different way to get involved? Perhaps maybe if price action pulls back, right? Maybe go down to the hourly chart and say, if price action pulls back into these highs, then what would that do to my risk reward ratio, right? And that can take it up like this. Come on, Keel. Suffering with the charts today, guys. Excuse me. That'll give you a potential reward like this in green, risk like that in blue. Obviously, you want to measure it out, see if it meets your 1-to-1 criteria. Or if you want to be a little bit more aggressive here on the hourly time frame, right? You can do a very aggressive stop loss above this swing right here. Ideally, right, good moves don't last, right? The best moves, especially breakouts, and that's what we would be expecting from this head and shoulders. They break out right away and go to their target, so we shouldn't see a violation above this level, ideally. Now, many of you guys are asking about the head and shoulders, and this is what's difficult. In the course, we're going to talk about the drooping neckline, and this is what I call a drooping neckline. These are very hard to trade. Excuse me, they're tricky because if we're trading the neckline break, which is one of the tactics, right, we need to wait until this drooping neckline is violated. And because it's drooping, right, you can see it just sucks into profitability. So it's a tricky one to trade. Again, we'll talk about it in the course, but that's why I didn't mention too much specifically about the head and shoulders. This just isn't an appealing one. Still gives you the confirmation, the clue that we could be looking for a reversal, but not really a tradable pattern, not the ideal tradable pattern. So, oh, lastly, before I go, one more thing about the Aussie Canada. I forgot to mention this, but on the fundamental side, we do have a Bank of Canada rate statement coming out tomorrow at 10 o'clock. Now, This isn't a Bank of Canada rate statement where we're expected to see any changes, but as always with these rate statements, especially if there's any type of statement that goes with it, we could see the market move based on positioning for the future. And just to give you some idea about Canada, Canada was in a rate hiking cycle. I believe they hiked 3 times before they recently started taking a pause. But the underlying belief is, again, no rate increase tomorrow, but they're going to get back into that rate hiking cycle probably in July. And if that's the case, we may see some strength go to the Canadian dollar. And as part of our Aussie Canada deal here, that would mean a move to the bearish side. And I want to read with you just a little bit of what's going on here. Governor Stephen Poloz heading to the rate decision Wednesday, where he's expected to once again refrain from lifting borrowing costs. That's hiking your rate. Even as the economy shows signs of strength and is running up against capacity constraints, it's a cautious stance driven by a wait-and-see approach to the long list of uncertainties. Everything from NAFTA to the housing market, rather than any concerns about fundamental economic momentum. After the current pause, which came after 3 rate increases, so look, there was 3, most economists are expecting the Bank of Canada to return to a hiking path in July, followed by one more increase at the end of the year. It's all about timing, said Jean-Francois Perlot, chief economist at Bank of Nova Scotia in Toronto and former central bank researcher. From our perspective, rates are going up. There's no question about it. But it's just when will they go up? So that's a little bit of background going on with Canada, just to give you an idea of what to expect going into that rate statement tomorrow. Okay. Oh, and we have our lower low, lower close here on the 15. I'm going to go ahead and short this pair. So I'm going to sell at market. We're going to get stops right above this consolidation. ATR is 6, or excuse me, ATR is 8. I'm going blind. So 98 13s. Does that put me above structure? It does. And I'm going to look for target ones at a retest of our previous structure lows down here. 97.52. And secondary targets are going to be at that lower extension point that we looked at yesterday, which is going to be 97 or right above 97 even. Let me just do some more analysis on that. Give me a second, guys. Get off my chart. Just want to double check since we've had a few different ebbs and flows since the original projection, but 97 even was the level, which is right down here. Let's just see what we have here. 1. 97.02, that's still there. Yep, so that still works. 97.02. Let me just see if we don't have anything that changed here. This should be the same. Yep, 50% right up there. All right, yeah, so 97.02 is right above this level. Is going to be my secondary targets, about 97, not 02, excuse me, 97.15s. All right, second targets on. And let me shoot this. I'll leave this on your chart for you guys to see. I'm going to shoot this into the trade floor, and I'll be right back. Very easy to get caught up with paralysis by over analysis. And this is a good example of why it's worth having or worth doing your full top-down analysis. Because when we did our top-down analysis, if you guys remember, the first thing I did, I looked on the daily chart. And what type of bias did I form on the daily chart? Who remembers? Yeah. I formed a bearish bias on the daily chart. We'll go back one more time and just show you guys. All right. So we looked at the daily, formed a bearish bias because of this 3-bar reversal. Right? This 3 candlestick combination where we had 1, 2, 3. Formed a bearish bias there. This was all in yesterday's Trading Edge video as well, right? That was a bearish sign for me. Now I'm not thinking full continuation down, only looking for a move to about right here, but a bearish bias here. We then went down to our 4-hour chart and we had the head and shoulders pattern. This is going to be a head and shoulders top, which is also a bullish or bearish setup. A bearish setup. And what we're looking for was, or what I was looking for, is a retest of our shoulder. Because again, not a fan of the drooping neckline. Really kind of kills opportunity. So looking for a retest of the right shoulder, which is right here, which would be a bullish or bearish move. Bearish moves. You can see it's all consistent. Bearish, 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 bearish. So we go down to the 15 and we can see this and we can say, ooh, you know what? This could be a potential head and shoulders. Again, we don't know if it's confirmed until we get a retest of the neckline here. Could be a potential bullish head and shoulders pattern. Should I involve myself in a very aggressive move here at the right shoulder to get long? And that is an entry technique. It's the most aggressive entry technique, and it is a valid entry technique. But with what I've talked about going forward, for me, no, right? I don't want to involve myself in an aggressive bullish move when every other aspect of my analysis said bearish, right? So you learn, I don't want to say you learn to ignore. I guess you do learn to ignore. You learn to filter. And that's why it's so important you go through a process of trading, because and it's hard for me too, right? Many of us go on the charts and we just look for trading opportunities. How many of you guys go on the chart and simply just look for trading opportunities? And it's really hard not to. I find myself doing that every once in a while as well, because we get days where it's like, okay, well, it's Tuesday. It's my day to do a Trading Edge video. I don't really have anything on the radar, but I know I need to find something for you guys because I'm obligated to do this video, and I feel bad if I don't. So then I start going on charts, and instead of just performing analysis, which is what I want to do, 115.64 rolling stops here on the euro dollar, or targets, excuse me. Instead of going on to the charts and just performing analysis, I'm now going on to the charts and trying to find something. And that can be very dangerous because if you look hard enough, what do you think will happen? 115.97 now. You look hard enough, what do you think will happen? 115.97, 115.64. You look hard enough, you'll find something. So it's very easy to look at this and be like, well, this is a head and shoulder, this is a potential head and shoulders bottom. We can look for an entry reason at the right shoulder. But for me personally, it just doesn't fall in line with my overall analysis for the market. So it helps me filter this. I can say, okay, Akil, well, you can recognize a head and shoulders bottom. But is that a head and shoulders bottom that you want to trade? Especially at this moment? No, it's not. So you recognize it. It is what it is, but it doesn't really affect your trading. Now, the hard part is also not letting it scare you out. If you're taking a short position here, especially as a newer trader, it's very hard to stay confident. So you're taking a short position and you see the market start to bounce up against you, and you're like, oh my gosh, no, that's a head and shoulders bottom. That means the market's going to rally up. If the market rallies up, I'll be stopped out. Maybe I should just get out right now. That's an entirely different battle, but that's also something that you'll have to face. So trading, what can you say, guys? This is trading. No one promised it would be easy. Actually, a lot of people promised it would be easy. I take that back. If anyone promises it will be easy, they're lying to you. Let's put it that way. Simple is a different story. You can make the case for simple. Easy, not at all. Not at all. Aussie Canada target one's hit. Show you this real quick. Guys and girls, So we did as I expected. I thought we would see that move. Roll targets. Let's see if we can get a secondary targets hit down here at 97.16s on Aussie Canada. And we probably just saw a big, that Canada Swiss trade you talked about is probably out the mix anyway. Perfect. I like it. I like it. Here's a look on the range bar charts, by the way, too. You want a little different feel of the market. See, this is why I like the range bar charts. You see how we spiked down? We came down, we got that spike. Oh, sorry. See how we came down and got that spike? Doesn't really tell you a lot of information here on the 15. We go over to the range bar chart. You kind of see the different ebb and flow. The move down, the little bit of a retracement, right at structure, right? No surprise, right? Oh, come on, Aussie Canada. It's tickling it, guys. It's tickling it. We're not going to watch that. Actually, I am going to watch it to make sure I don't get filled.
Order filled.
There we go. Boom. Order filled. 2 targets hit on Aussie Canada.
Order
Good
canceled.
deal today. Here's a look on the range bar chart. Good deal today. Perfect trade, guys. What you just saw was a perfect trade. So what I just showed you was an example of a head and shoulders pattern. And the head and shoulders is a classic reversal pattern in the market. It's actually one of the most popular patterns out there because not only is it very frequent, but it's very reliable as well. And I just finished putting together a 12-part training series teaching you this pattern formation and teaching you a few different ways on how to trade it. And you can find that in the mastery course. However, with that being said, if you are new, right, if you are a new premium member, don't give in to those urges to head straight to the course and watch it or watch any strategy for that fact. Make sure you learn the basics first. That means either going to the basics course with Jason Graystone, where he teaches you what is a pip, what is limit orders, stop orders, all of the stuff that you need to do before you ever execute a trade in the market. But at the very minimum, make sure you check out the foundation course, a study on price action. That's where we talk about candlestick psychology, teaching you the importance of the body, importance of the wick, the importance of simple candlestick formations, how to read a trend, how to read a price chart. Because without that knowledge, you're going to have a very hard time understanding any of the advanced techniques that we go on to teach. And really, having that foundational knowledge is going to help with your trading psychology. And here's what I mean. Gave us a little bit of pain in the beginning. And not real pain, but what I mean by pain is, if you can see it here, we entered at this area, and then we did make a move, initial move down, and then we came back up. Now, we never violated the level that we needed to be violated in order to have any fear. And that's the cool thing about trading, guys, is like everyone wants a strategy, right? Everyone wants a strategy. Everyone wants a technique. No one wants to study the foundational elements. The things that I preach all the time. Learn how to read a price chart, right? Who can tell me one of the biggest benefits of, one of the hidden benefits, I should say, of knowing how to read a price chart? Who can tell me? You probably won't expect this answer. Trade entry, stops and targets, how to take the trade, becomes second nature. Psychology, right? When you know how to read a price chart the correct way, you know what, I don't want to say what should or shouldn't happen, but you can easily project what the market will do. So let's just walk through this on the range bar charts, right? We have this, right? Bearish trend. Would you guys all agree? Bearish trend. Here is our entry. Right up here. Right? We know that, and we're looking for a trend continuation move to the downside, right? At what point is this trend violated? Above our previous outside return, right? So this blue line, right? This is when we know our trend is violated. So let me ask you this. Until this level is violated, is there any reason to lose confidence in our trade? No. So as the market does this little dance where, again, we enter, we immediately get taken a few pips in the profit, and then we start to retrace. And on this retracement, people start to freak out. Right? You've been there. I've been there. Right? You ever done that? You start to freak out. Oh my gosh, it's going against me now. I'm down 5 pips. It's going to lose. 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 Right? Sit back and ask yourself, why do you think it's going to lose? Do you have any reason to assume that it's going to lose? Seriously, think about it. Tell me. Is there any technical reason that because price action went against you by 5 pips, you're now in the red, that this pattern is more likely to lose than win? Where does it say in the Forex rulebook that as soon as you enter a trade, the market has to go in your direction right away? Does it say that? No. So why are we creating this fear? Where is this fear coming from, guys? Where is this fear coming from? Is this a real fear, or is this false evidence appearing real? Are we creating this? We're creating fear. Fear in itself is a creation. When you understand how to read a price chart, and more importantly, when you are confident in knowing what the market's rules are. Now, it's not this doesn't mean that the market has to follow the rules all the time. We all know that. The market does what it wants whenever it wants to. But when we understand the rules of the markets and we understand what should or shouldn't happen, what levels mean confirmation, what levels mean violation, there should be no reason to fear because structurally, we were never in any danger. Am I right? Structurally speaking, technically speaking, were we ever in any danger? Were we ever in a point in the market where we said, oh, crap, violate it? You know what that means? No. And because of that, that allows us to stay calm. And where other traders will scare themselves out of the position, we trust ourselves, we trust our analysis, we trust our system, and we stick to it. And it's amazing when you just stick into an opportunity and you don't sabotage yourself, it's amazing how your performance improves. When I turned my trading around from struggling trader to consistently profitable trader, I did nothing technically different. The biggest change that I did was I stopped tripping myself. I stopped stepping on my own feet. I stopped sabotaging myself in the market. I just let the trade play out. That was the biggest change I made in my trading. And trust me, I thought I did something different. I thought I was doing magic tricks. I went back, I did all my post-market analysis, all my trade reviews, and I'm like, ooh, I must have found there's got to be a special secret candlestick that I must have identified that has allowed me to be more profitable. I'm like, no, I just stopped making dumb mistakes. I stopped doing dumb stuff. I stopped doing dumb stuff. And I felt like an idiot. Because as I look back through all the years I was struggling, I'm like, are you serious? Are you telling me if I just would have done this a year ago? And what's worse is my trading mentor, Jason Stapleton, this is all the stuff he told me not to do. He told me the same thing I'm telling you guys right now. Right? When I got educated, he gave me a 60-page document on trading psychology. I read every page of it. Yet, I refused to follow any of it. Felt like an idiot. So that's the real power of learning structure, right? Learning to read a price chart. It's not just to, obviously it does help you trade, don't get me wrong. It makes you, the better you are at technical analysis, it is a skill. The better you are at technical analysis, the better trader you're going to become. But psychologically, it keeps away that panic. And on the other side, right, it keeps away greed as well. Makes you a lot smarter about where you're taking profits at and not getting too greedy. You follow me, guys? I can't stress how important that is. And I'm glad you guys got to see the entire thing, starting with yesterday's Trading Edge video, because that's where it all started. I'm glad you got to see this. So glad. Because usually the bulk of my lessons come from losing trades. Usually I try to show you the losing trades and give you lessons on that because I think the losing trades are more powerful because they offer learning opportunities. And many of you, no offense, many of you are in a position where that you're used to that. You're like, okay, I'm used to losing, so I can relate to this. But every once in a while, I want to show you a winner. And it's not to brag, right? Was it a good trade? Yes. Were we helped out by some news? Yes. Will I care about this in 5 minutes? No, who cares? But I want you to focus on the process. Everything from the conversation we had about what direction to get involved in, to understanding the news event, to not panicking, to trailing. All of that's important. And when you guys master that, man, you're going to give the market trouble. Take that back. You're going to be able to participate in the market. Never want to poke the beast. So I think we're going to call it a day, gang. Good trading day. 3 for 3. And since I said that, I'm going to jinx another trade because that's just how it works. Whenever I get happy about something and I'll be like, yeah, winning day, the next trade's going to lose. But I'm cool. I'll do 3 trades, 3 wins, 1 loss all day, every day, twice on Sundays. Booyah, says Gabrielle. So I hope you guys enjoyed that conversation on how learning the foundational elements of technical analysis can have a major effect on your confidence in the market. I know many of you still don't think of trading psychology as being an important piece of the pie. You're just worried about learning how to trade, learning what to trade, give me the strategy so I can make money right away. But I'm telling you, trading is a marathon, and only those who have mastered the element of trading psychology, only those who have complete control over themselves and their emotions when active in the market, well, only they become consistently profitable in the long run. So I'm going to continue to preach that until I die because I know that is what has changed my trading around personally. And if you ask any professional trader out there, they'll tell you that that is the #1 factor in seeing success. Now let's dig into the charts. I'll be really quick. Just want to give you a brief overview of the month of May as far as the stats go. So let's go check it out. So when I first looked at the month of May, my first reaction was kind of, right? Nothing special. But now that I've had more time to kind of think about it, I'm actually very happy with how the month went. It wasn't the most profitable month in the world, right? It wasn't a negative month. So, anything break even or anything where you're not losing money is a positive in my book. But I really went into the month thinking that I was due for a drawdown. If you've been following along with these videos and kind of my updates on the equity curve, you guys know that I've been performing slightly better than how I average. And the realistic mind that I have, right? It doesn't allow me to get overconfident and say, yeah, I'm just better than before, right? It puts me on defense like, okay, you're going to give some back, Akil, so how about you mentally prepare? And that's how the month started. The month started with really a drawdown. I remember, let me just see if I can look at it real quick. My first 1, 2, 3, 4, 5, 6, 7, 8 trades, right? 1, 2, 3, 4, 5 of them were losers. So I'm saying to myself, okay, here it goes, right? Just, don't drown, steady through the drawdown, and we'll get to the next period of equity highs. And really, this past week was amazing. It's really what pulled me out of that very brief drawdown. I did take a few losses to end the week, But on Wednesday, I went 5 for 5, right? 5 trades, 5 wins in it, and over 300 plus pips. And it really brought my equity curve from that negative to that positive, and I ended the month that way. So I'm very happy at that. It wasn't the most active month. I've been trading less this year. I don't know if it's a combination of me becoming more picky with my trading opportunities, me just becoming more serious about the coaching side and dedicating more time to our trading clients than my own trading. But I took about 16 trades and went 9 for 7. So that's about 55%. So that's right where I normally am, right? Slow, boring, win a little bit more than I lose, right? Nothing special. Now, as far as some other standout numbers, what was interesting is that half of those 16 trades were Gartley patterns, right? So 8 out of my 16 trades were Gartley patterns. Unfortunately, Gartleys have not been my best friend this year. This reminds me of about 4 years ago where Gartleys destroyed me for about the first 6 months, and I was very close to dropping them from my trading plan, and I decided to hold on, and they ended up having an amazing second half of the year. So that's what's going through my mind right now, because I'm bleeding money with Gartleys. I'm not bleeding money. It's a bad way to phrase it. I haven't been profitable with Gartleys this year. I've been hitting at about 57%, which is a little bit less than what I should. They should be in the 60 ranges. But I am down money for the year with the Gartley pattern. But again, having that experience of going through a year where I got blasted by that specific pattern formation for 6 months, and then it brought me all the glory in the world for the final 6 months, it allows me to be very, very patient and not panic. And again, I'm not down so much that it makes a big deal. But it is interesting that it's the only strategy that I trade right now that is hitting in the negative. Aside from that, everything is kind of the same where it's been. Bat patterns is about 62%, so that's hitting a little bit higher than what I'm used to. That is my second profitable technique right now, my most profitable advanced pattern formation. Ciphers are 80%, right? So their ciphers are on fire. And then my structure and price action trading, that's right at around 50%, which is usually where it's at. And that has been the most profitable way, most profitable technique of me trading this year. Aside from that, what else do you guys like to hear? I do this because of you guys, right? You guys like to hear the numbers and kind of compare it and just hopefully get a realistic expectation. A few of you guys may be struggling with Gartleys, so now you're probably like, yes, it's not just me, it's Akil as well. So that's why I do these, right? I personally don't really care about the stats too much unless there's any outliers, but what else is interesting? Oh, okay, well, here's a trend that has continued, a negative trend that has continued. I still can't find a win to save my life on the pound dollar. I am 0 for 6 this year. I do not have a winning trade on the pound dollar, and that is a pair that is bleeding me money. Everything else is fine. I'm 75% on the euro dollar, 60 on euro yen, pound yen 67, dollar yen 86, dollar Canada 80. I'm 0% on the Aussie dollar, but I've only taken 2 trades, so that's not that pair doesn't really mean much. 63% on New Zealand dollar. I am down a little bit on Aussie Canada at 43% for negative pips, but yeah, I've lost almost 600 pips on the pound dollar this year. I haven't taken a lot of trades, only 6, but I am 0 for 6 on that pair, which is very interesting. That's usually one of my better pairs. So that's the only kind of big stat that stands out for me. Again, I haven't done a real thorough analysis of this yet. It's only the first day of June, but I'm trying to give you guys something. Let's just see. 63% is what I'm down to now overall as far as my win percentage. Target 2s are continuing to kick target 1s behind, which is good. That's how it should be. And aside from that, the equity curve isn't impressive to many of you, but it's going in the right direction. I'm up about 17% from the year. So added 1% this month, and that puts me at an average of about what? I didn't trade January, so February, March, April, May, 4 months. 17 divided by 4, 4.25. That sound about right? Averaging about 4.25% a month. And just to give you guys some a benchmark, what I try to average and what I should be averaging, I guess, is 3% a month. So again, I'm performing a little bit better than expected. And we'll see how the summer goes. Speaking of summer, I have a podcast coming out next week, either Monday, Wednesday, or Friday, talking a little bit about summer trading. I did get a question under one of my YouTube videos about that. So I decided to put together a podcast episode. That way, many of you guys have questions about, should I trade during the summer? Should I trade differently? You know, my thoughts and my experiences on it. Hopefully you'll get a chance to learn from that podcast episode as well. All right, so I appreciate you guys watching this video. And before you leave, if you can do 4 things, it would be a massive help. 1, hit that like button below this video. It takes a second and is a massive way to spread the word here on YouTube. 2, subscribe if you are brand new. That way you don't miss the next video to come out. 3, make sure you share this anywhere on social media is good. Facebook, Instagram, Twitter, LinkedIn. You guys spreading the word is how we attract new traders to our content and hopefully save a few new traders' lives each and every week. And then finally, leave a comment below. You guys know that I do read each and every comment that you guys leave. I respond. Sometimes if it's a question or a very good comment, it sparks an idea for the Trading Coach podcast. That way we can help a lot of other traders. And also it gives us some encouragement. What we're doing here is going against the grain. As you guys have seen, we preach a different message than what you see out there on the internet. And we get a lot of... we get a lot of people that don't like that, probably because we're ruining their scamming business. So whenever we see a positive comment, it allows us to know and gives us more confirmation that, hey, we're doing the right thing. You guys are really hearing the message that we preach, and it gives us power to get up on a Friday after uploading 12 videos and going for a 6-mile run and get a free video done just for you guys. So keep it up, and until next time, plan your trade, trade your plan. Good luck in the markets next week, and I'll see you then. Almost forgot the shameless plug. If you guys don't want to wait until next week to see this handsome face again, make sure you sign up for our 2-week trial. That'll give you access to our Tier 1 trading platform. That means you'll be able to see the Trading Edge videos on a daily basis. You'll get access to both the London live room with Jason Graystone as well as the New York live room with myself. You'll also get access to our emergence training course. So it costs $1 to do it. That's how we keep the trolls away. So if you're interested, I'll see you on the platform.